Did you miss the move? If you did, here's what you didn't see and what is coming next. Hey guys, it is Keith Allen, and my oh my, what a way to start the week, start the month. We've got a lot going on, right? That's an understatement. Hope everybody, before we get too deep into this, hope everybody who celebrates a great Thanksgiving weekend. I had a great time, spent lots of good times with family and friends, and ate way too much food. But man, I am grateful for you guys and thankful for you guys who've been following along. And I hope that those of you who have been with me were well positioned for the price action that we've seen unfold here in the last 24 to 48 hours, because I've talked about these things very clearly, very specifically, and I showed you what to watch. And gosh, everything is playing out exactly as I outlined it for you. So I hope that, again, you are well positioned. And if you weren't, it's okay. You have a chance to redeem yourself, and not really redeem yourself, but to, well, quite frankly, save your ass if you are underwater right now. So before we climb in, just a little bit of housekeeping. I want to remind you that this is it's been a big holiday weekend, right? And huge holiday sales. I don't know about you, but I took advantage of some of those deals, both for my shopping for family, as well as shopping for the tools that I use for myself. So, as you know, I'm not much of a shiller, but I do want to make sure that you are aware of the deals on the tools that I use. Of course, I'm co-founder of Material Indicators. Material Indicators having a one more flash sale, one more shot at 40% off with the Cyber Monday sale. Link to that is in the description. But some other tools that I use, 3 Commas. I can't recommend them enough, man. Just a great platform, especially if you want to automate your trades. And it's not just for people who want to do bot trading or algo trading, because it's a great way to manage your trades all in one spot, especially if you're using multiple exchanges. And of course, TradingView, where I do all my charting. They've had just had a fantastic Black Friday sale, and they're doing the same thing for Cyber Monday. It's like up to 80% off, plus a month free. So check those out. Links again are in the description down below. So what are we getting into today? I'm not a guy who likes to say "I told you so" to inflate my ego, so I'm not going to do that. I'm simply going to say that I hope you've been paying attention to the analysis I've been doing, and that I in some way helped you get positioned for what has been developing here. And so, if you haven't been a longtime follower, or you missed last week's analysis, I'll let you know that. And I posted this yesterday. I mean, I had interestingly, through the holiday weekend, I was spending as much time as I possibly could with family. But there was some critical PA developing that I just felt the need to analyze charts a bit and post some content for you guys. And I hope that you all saw that and were able to protect yourselves before things really got nasty. In the summary of it, the short version is we had synchronized daily, weekly, and monthly candle closes yesterday, end of November. And those 3 closes were critically important because they came at a time and during pricing, in a range, both a time and a range, where we got 3 validated confirmations that not only define the year-end trend, they define the macro trend. So in this analysis, we're going to look at exactly what those things were, in case you missed them, and so you know what to look for in the future. And we are going to look at what's happening and what I expect to happen based on the data that I'm seeing here as we move into the end of the year and into 2026. The fact that so many accounts on X are screaming, "What the fuck happened?" or "scam" or "manipulation." And then you got another bunch that are going, "Hey, the biggest bull move ever is about to occur." I mean, it's laughable. Just I'm going to ask you, if anybody is posting that, unfollow them. All right. If anybody in your feed is posting that, unfollow them. They're not helping you out. Plain and simple. They have no idea what's going on, or they're just paid shillers and hype guys who are luring sheep that they're going to dump on. So avoid that and start following people who are legitimate analysts who don't have an agenda, and even so, and myself included. Um, don't take what I say wholesale and blindly follow what I say. I want you to put the things on your chart that I'm sharing with you. I want you to track what I'm showing you to track and do your own research. Gain the insight from people who you trust, okay? But do not follow anyone blindly. And that includes guys like Peter Brandt and Bob Lucas and and others who are, in my opinion, really exceptional analysts. But you have to form your own analysis. You have to form your own opinions. Take whatever insight you can. Don't gravitate towards what just fits your bias. If you disagree with somebody, don't just disagree because they don't fit your bias. Take a look at what they're telling you and take a look at that data and see if it gives you something to think about, something to reconsider in your own position before you just write it off because it doesn't agree with you. And I would also say, and I posted something about this recently, this is a time to ignore the narratives. Okay. Because, and admittedly, I hung on longer than I probably should have. Right. I kept saying that, hey, I don't think the top is in. I don't think 126 is where we end up. I don't think that's the top for Bitcoin. I don't think 4950 is the top for ETH. And I still don't think that's the top all-time high for ever top. But it looks like we're at a cycle top. And part of the problem for me is that I was clinging on to a couple of different narratives. One that most of us, followed along, whether you agree with his policy or not, is that Trump was not going to let things go south on him, and he's going to do everything he can to get the market where he wants it to be. He's still got time to do that. Another was, hey, with all this institutional adoption and the sovereign adoption and the corporate treasuries, gosh, I really don't see price falling too low again. And then the third one and the most recent one that I have been following was Tom Lee, who still is a guy that I have a lot of respect for. And I believe, I was never an ETH guy at all. And I had very little ETH. And once he came in with his treasury concept, it wasn't that we had, hey, a company that's going to go with ETH treasuries. It was the reason that he established the ETH treasury, and that was really because of the fact, and this is not speculation, but because of the fact that institutions, banks specifically, are building the new financial system on ETH. And he has a front row seat to that. So it's not speculating that banks might do it. They are literally doing it as we speak. And so Tom Lee may at this point be a bit of a hype man for his own gain, unfortunately. So, I still see him posting that he sees, 7,000 or 9,000 as a year-end price or a January price target for ETH. Hey, may or may not happen. I personally am not subscribing to that. I am strictly looking at the data I see in the charts, and I encourage you to do that too. Shed the narratives, because today especially, people are now looking for narratives to support their theories. Okay, and one big popular one that's going on is about a Japanese carry trade and Japanese treasuries, et cetera, et cetera. Hey, that's fine. And that may support what's happening. But we talked about all these things weeks before anybody mentioned anything about Japan. So take that for what it's worth. Sure, that may be fuel for the fire, but I don't think that is the reason that we're seeing the price action that we're seeing right now. So, with that, we're going to climb right in. I just want to remind you live chat is open. Do me the favor before we start, click the like, click the share, invite somebody, invite one of your fellow trader friends into this, invite someone in your, if you're following any trading groups, do that, and invite people into the stream to help me grow the channel, and do yourself the favor of hitting the subscribe button so you don't miss any of the free alpha I drop on you guys on the regular. And now let's go ahead and climb in. Let's start here. I guess let's start on a candle chart, okay? And we're going to go through the time frames that I discussed with you guys, just to show you what I saw that was painting the picture for what we had, and what the three validations I was looking for were, that to me confirm that we are, and wait for it, in a bear market. All right, so let's go ahead and start on the daily chart. So let me go ahead and share that guy right here. We'll start on a daily candle chart. Let's go with this one. Yeah, that's the TradingView candle chart. Check it out. And don't forget, they got that Cyber Monday deal going. Okay, so on the daily, there were some early signs. Okay, and and as I've mentioned to you guys before, it's not any one thing, and I don't make a decision based on any one thing. I look for confirmations. I look for multiple, three to be precise. I look for three validators to confirm a move. And sure, that may cost me a little bit in terms of percentage points, waiting for those things. But as a disciplined and data-driven trader, I wait for those things, unless I have some insight that tells me, "Hey, go early." And hey, maybe when I, in hindsight, go back and analyze these things, I might act a little quicker. But actually, probably not. So here on the daily chart, you can see I have our, well, let's start with the basics. I'm gonna clean it up, and I'm gonna add the layers in that helps me analyze everything that's happening here. Okay, so the first thing that is an indicator, not a confirmation, but an indication of bear market conditions, is not just that price lost the 21-day moving average, or that we had a death cross. It's that we had not one, not two, but three death crosses. The green 21 death crossed with the blue 100, the red 50, and then the purple 200-day moving average. And now, and in terms of early indications, this would have been the first early indication here around 110. Okay. And now you see we have a death cross between the purple 200 and the blue 100. So essentially, not essentially, exactly, and literally, all four of what I consider the key moving averages are completely wound up in a death cross. And that is a sign of a bear market. Now, could it be the sign of the bottom? We talked about this death cross happening here and said, hey, that might be something that is indicative of marking bottom. And we did hit just a nasty low here at 80.5K here about a week ago. Okay, a little over a week ago. That was Friday, November 21st. So that's one thing. Let's add a new layer into this. Let's add trend precognition. Actually, you know what? We'll look at trend on the weekly, because that gets those higher time frames, I think, are more indicative of what we're talking about here. But what we can add in here is timescape levels. And timescape levels is really the newest indicator that we've released at Material Indicators. And I got to tell you, this thing has been an absolute game changer for me. Not necessarily so much in picking targets, although it's good for that. Um, just for risk management, like telling me when not to ape into a trade. And so we have a dynamic here. And the way that this indicator works is it's showing us um, we have it set for quarterly opens. Okay, so quarterly, of course, the first week of the year, the first day of the year would also be a quarterly open. So we have yearly and quarterlies, and the first week um, of those time frames are all marked and as timescape levels, and these are historical resistance and support levels. And the cool thing about this indicator, one of the cool things is it's not just that we have now lines that we can look at on the chart, but unlike a lot of indicators on TradingView, which may have some candle lag, there's no lag here. These levels are set the instant that time period opens, the instant that timescape period opens, and they are locked in. They never change. There's no repainting. It is the instant that we have that yearly open that this level is set. It is the instant that we have the quarterly open that this level is set. It is the instant we have the first weekly open of that time frame that that level is set, and it never changes. And so we can see how these work, and if you learn to use this indicator, you'll note as we have, and we've discussed this in our community, by the way. And if you're not a member of our Trading View community, of our trading community on Telegram, I encourage you to join that. Link is in the description below, because we talk about this stuff all the time. And one of the things that we've noticed is that price uh, tends to ping or range between those two ranges of any period, right? The open and then the first weekly open. Price tends to range between them for a bit. So if price goes up, for example, let's go to the yearly open, and which was right here, right? And if price goes up from the yearly open, what tends to happen is there is some resistance at the first weekly open until that is then broken. And so you can see that's exactly what played out here. We went up, we had this fake out here on the first weekly. That was January 6th here, right? Here's the open, the yearly open at 93.3K. And then on January 6th, that's the first Monday of that timescape, we had an open at 98.3K. So that's pretty significant, right? That's a $5,000 range. And then price broke down and came back and tested support here at the yearly open. We saw the support level, and then boom, things broke out. We then, of course, saw it lost and support tested, and the rest is history. After the death crosses is when we saw things breaking down, right? After this death cross, we lost the yearly open, and this was an early sign of what's to come, and we're seeing it now. So that's one thing. That's the daily time frame. We have all four key moving averages in a death cross, completely inverted, and we have failed after a couple of attempts to reclaim the 21-day moving average. We failed those tests and failed to reclaim the yearly open. Now let's go to the weekly time frame. On the weekly, it is pretty common knowledge that losing the 50-week moving average is not a good thing. But look where it landed. That first candle came right to that yearly open. And then we thought, oh, maybe we're going to be okay. But then what happened, right? First we lost the 50 and reclaimed it briefly. Then we lost it again, came to the trend line, and a perfect support test on that yearly open timescape. And then the breakdown continued. And it continued right into the 100-week moving average. Now, here's where I want to bring trend precognition into the mix. As I mentioned, Um, a lot of indicators on TradingView have some candle lag because of the the dynamic of waiting for um, these signals to print, right? So we actually had a long signal right at the open, indicating that price was not likely to go below this low this week. Okay, so essentially meaning price was not likely to go below the 100-day excuse me, 100-week moving average this week. But um, here's what you need to know about this particular indicator and how you can tell if it is a um, high probability that it's going to print as a valid signal, or if it is a high probability that it's going to invalidate. And here's how you can find that out, how you can figure that out for yourself. The strength of these signals. Number one, the strongest signals appear right at the candle open close. Okay, so this appeared last night instantly, and it was a strong signal. It had a probability score of 45%, I believe, and which is a solid signal. And you can tell the strength of these signals two ways. One, you can just note the length of the tail of the arrow. The longer the tail, the stronger the signal. And number two, you can see that data right up here. Okay, it's right here in the metadata. So this signal is a 27% probability, by the way. And so yesterday, this signal appeared right here, had a nice long signal, nice long tail on that arrow. It was a 45% probability, but it instantly, almost instantly, started to lose strength. And in the time that I was writing my analysis, I mean, in about, I don't know, 30, 45 minutes, it went from a 45 to a 32. So I knew it was losing strength, and I posted in my analysis yesterday that I thought that there was a good chance. I didn't have confidence in that signal, and I thought there was a good chance it would invalidate. It may come back, right? Now that we're bouncing from this 100-week moving average, that signal may come back, but for me, it's already been invalidated, and I don't trust it. So even if it does appear, I don't care. I'm ignoring it. So losing the 50-week moving average and failure to reclaim it. And not only failure to reclaim it, failure to reclaim any of the other key levels here, our yearly open timescape, our trend line, all of this after now, right? Where did we close this week? This first week that we had lost the 50, price closed at 94,187. The 50 at that point was up around 102. So this was the first candle close below it. And I look for full bodies to really validate things. So this one was not decisive enough to call it, for me. Anyways, this one certainly was. We had a deep wick below, and we had an attempt at the trend line, an attempt at the yearly open, and an attempt at the trend line, which gave us a shot of hopium, but it obviously has not played out. We got a second candle here that closed yesterday. This is a full candle body below all of these levels. It didn't touch the yearly open timescape. It didn't touch the trend line, and it didn't come anywhere close to the 50. That is another validator in my opinion, of a bear market. While we're on this weekly time frame, let's look at one more. And this is really something that, for me, overrides a lot of things. Weekly RSI. All right, so let's come down here, and I got a bunch of stuff on the chart. I'm going to get into what that is here in a bit, but let's just try and simplify a little bit. I want you to notice this line here, which I have at about 41.5 to be precise, is where I've got it. And you can see how you can lay this line on your chart yourself. You may put it at 41, you might put it at 42. This is where I put it, happy medium, split the difference for you. But look what happens every time we get weekly closes below this line, right? Those are bear market conditions. Okay. This is um, early on in Bitcoin's history. And then you see the recovery. And what happens when you cross back up and you get those closes up? You start on that upward trajectory. Um, let's find another one. Look, here's a test. Came close, but that wasn't it yet. We saw a recovery here, and then we saw a further breakdown, and then the confirmation with a close below. This was September back in 2014 when price was like, what, less than $500. Oh, dare to dream. Um, but again, you see a series of death crosses and kind of similar circumstances. Um, again, let's go to, this is 2018 after that 2017 bull market. This is where little old me came into the dance. This is where I first started. This is where I bought my first $100 worth of Bitcoin. And I was super excited and I had no freaking clue what I was doing. And I got wrecked. And so, and I went way deeper than $100 to start after that first $100, by the way. But I got killed here. And we had a massive, massive correction in that bear market. It was 84%. It lasted from December 2017 to December, a full year, until we saw the recovery. And again, if we look at what happens when price breaks below, when RSI breaks below this level on the weekly time frame, we had a mini bear right here on the COVID crash. This was an anomaly to me. Didn't last very long. We continued the trend. Had this not occurred, I think that this trajectory would have been different. Let's keep moving along here. Perfect example here, where we have a breakdown and deep correction, 77% in this bear market. And this bear market lasted from November of 2021 all the way to November of 2022. That was another year. And so what I think is different this time, because I've already seen people comparing, hey, what about that 2021? We had it, we thought we had topped, and then we had a correction, and then we had another all-time high. Is this going to be just like that? Well, for me, it's not just like that. And the reason is at this point, and many technicians think that this was the top and that this was manipulated, and that very well may be the case. But one key difference here is that we did not have a situation where the RSI was below this level, right? The RSI was holding here. We actually came close, touched it, and then bounced, right? So I'm telling you, put this line on your chart. Just do it. And it's going to be a good guide for you. And so we don't have that situation here. What we have here, and what really got my attention yesterday, was we were on, up until yesterday, we were on a trajectory to recover this. Let me expand it. We were on a trajectory to recover. And this right here could have been an indication that this was indeed the bottom, right? Because right from this dip to 80.5, we saw price recover, and we saw RSI on a pretty aggressive trajectory to recover. But at yesterday's close, it did a complete reversion and is now headed back down. So for me, this is yet another validator confirming bear market conditions. Okay. But if that's not enough, let's keep going. Let's go to the monthly time frame. On the monthly, a week ago or so, we had recovered this 21. We wicked below the 21-month moving average, and then we recovered it. Yesterday, before the close, we were above the 21. And right at the close, we started to fall through. So we pumped up and fell through. We lost support at the 21-month moving average. That combined with everything else was another indicator to me that these are bear market conditions and that we are not likely to see an all-time high before the end of the year. And that's a prediction I made even sooner using trend precognition on the 3-month time frame. And I did this at the beginning of the quarter when we got a signal here. And this is a very strong signal, by the way. Look at this. 89% probability. That's like the strongest ever, pretty much. Strong signal here that price was not going to go higher than it did. And we just actually wicked slightly above it to get an all-time high. But that was fast and furious. That was also likely manipulated. And now we see price ranging between this actually a Q2 2025 timescape level and the yearly open. And so all of these things collectively to me spelled bear market. And that's why I leaned up my position. I've been building a position since way back at the FTX crash in 2022. And so happy to say that my cost basis is still quite profitable, but I have offloaded everything that I purchased above this dip. Okay. I didn't get the 80 I bought when we reclaimed the timescape at 82. That was the Q2 2025 timescape. I did buy this. I to be honest with you, I actually bought the whole way down, and I shouldn't have purchased here on the this was a knife catch that I had it in place and I wasn't paying close enough attention, and I kept it there. But I DCA'd down. I bought here. I bought like I think 88, and then at 82. So still a profitable position, or portion of my position, but I've sold it all over the weekend. And now my average cost is well below 50K. But now I'm wondering what I'm going to do with the rest of that. And I'm wondering if that's actually going to hold. And so I'm considering leaning that up more. Now, when would I do that? Certainly not while we are in free fall, but we are now in recovery. And because of the fact that, let's go back to the weekly, because of the fact that we are finding support here at this 100 week moving average, and we are seeing some respectable bid liquidity showing up in this range. This is an indication to me that we might range a bit. Now, another indicator, by the way, of what was to come that freaked me out a little bit. Well, I won't say it freaked me out, but alerted me to what I thought was going to develop is that we had a rug pull on some bid liquidity right here. Right. And so when this pulled on, this was Friday. That's when I sold the first piece, because I knew that this was likely to invite some downside pressure, open the door for the downside, which it did. And then, of course, yesterday on the dump, a lot of this got dumped. Right. And so this was a nasty cascade. So, when I hear all of the noise about, manipulation and a coordinate, there's a post floating around that says it's a coordinated sell-off among all these exchanges. That's not what happens. And if you have different insight to this and you have facts, then by all means chime in. Live chat is open. I'd love to hear from you. Um, you have to remember that there are a lot of algo bots in this market. And many of them are programmed to some of these key indicators, some of these key levels that I just shared with you, especially like the moving averages and the death crosses and things of that nature, and the yearly open. And so when those things are lost, they just automatically trigger those bots to sell or buy, depending on what the strategy is. And so that is likely what happened. And then when one goes and price drops further, a cascading effect continues. And so I think that is the most likely explanation for how things dump so fast. Um, you have a different opinion. I'd love to hear it. Now, what we're seeing here, though, I just mentioned to you that hey, it's good that we have this near range bid liquidity, and it's good that it is stacking here at this 81K range, right? You can see more coming in, right? We had 37 million, and then it became 47 million, and now it's up to 51 million at that one level, which is good. And then you see more bid liquidity stacking above it. Here's another 33 million, and another 30 below that. So this is all good to see, but you got this market maker right here making it rough on you. So there's that. So keep an eye on this. Now, what's happening? What are whales doing? This is another indicator that clued us into what was going to happen. Purple whales were selling. Okay, for the past month. Purple and brown have been selling quite a bit. So this was an indication that things were breaking down. That's called order flow. And I highly encourage you to pay attention to it, because this is what's going to tell you when things are on the up and up. Now, overall, you can see that sure, those brown mega whales did, are net positive, but they've sold about. This is a normalized view, so they've sold about. Let's see, 90, just about 7% of what they had purchased. So they've trimmed up a little bit from this size. Keep in mind, these brown mega whales, that's the largest class, $1 million to $10 million orders. They can scale out at any size they want, right? They can do it all in $100 orange or yellow class if they choose. So don't be fooled. Now, if you see purple start to go vertical, that's a sign that bulls are back, right? So keep an eye on that. In terms of what that means in terms of dollar value, let's see, those brown mega whales were up to 430 million, 466 million, 484, 490, 500 million, over 500 million, and 520. And it has now come down to 484. So not a ton of what they had, right? Just a fraction of what they held has been offloaded as market orders in that order class. So there's that. And so what else? What else you got? I told you that we would look at some other charts. So in addition to the Bitcoin chart, I'll look at an ETH chart for you. But in terms of what I think is going to happen here in the future, I honestly think, in my opinion, we are in a confirmed bear market, and that doesn't mean that there won't be rallies. But in my opinion, no new all-time high before the end of the year. Well, quite frankly, until we see the weekly RSI clear this 41 level, we're in a bear market. Simple as that. So any of the price action that we see, any of the rallies that we see happening are bear market rallies or exit rallies until proven otherwise. Now, at some point, you're going to have to, it's going to have to be the bottom, right? And when you see a bottom marked, and we get on an upward trajectory like we were a week ago, then that may be the bottom, but it won't be confirmed that it's the bottom until till price closes with the RSI above this level. Okay, so I hope that makes sense to you. If you have questions, ask. So in terms of what I may be doing with the rest of my position, gosh, I bought and have built this position for a long-term investment for my family, and I do not want to get rid of all of it because I've got a great cost basis from my early entries. It was dating all the way back to that FTX crash when we were at 15.2. So I am probably going to lean up if we get some good rallies. I expect that we might get another test of resistance here at the yearly open. Possibly even get a run up to the 50-week moving average. And if we started getting closes above those levels, well, that might change my perspective on things. But again, until we see the RSI break this level, I'm in the bear camp. And so that's what I'm looking at here on Bitcoin. Let's take a look at ETH real quick. ETH, as you can see, is also breaking down and not in good shape. In fact, it looks like we have another imminent death cross here on the between the 50 and the 100, and so that's not good. On the monthly, pinned between the 21 and the 50, until you break these levels, you've got probably more downside coming. Sorry, Tom Lee, I don't buy the narrative. And what was the 3-month? Now, we didn't get that same candle, but we didn't get that same signal on the quarterly on ETH that we did on Bitcoin. So you may see some health there, but we have all these narratives of there's a new version of ETH coming out, whatever it's called, Futura, or whatever it is. It's baked in. It doesn't freaking matter. It's baked in. It's not going to change anything when it releases in a day or two. Okay. So if it does, it's likely going to be a fake out until you start getting weekly closes above these levels. It just doesn't matter. That's my short version. I will continue on this for you guys later in the week, but I'm just looking at the clock and see that I got to take on my duty as a work from home dad and go pick up a kid from school. But hope that's given you some stuff to think about. Hope that is educating you a bit and helping you trade smarter. At the end of the day, that's what I'm here to do. Help you trade smarter. Don't forget to take advantage of those Cyber Monday deals. Links are in the description. Thanks for the follow. We'll talk again soon.